Hey, I'm back in Brooklyn, out of disguise, and I have a bonus back in Brooklyn guest, Mr. Achilles, and he wants to get down. Achilles! Okay, so, yeah, back in Brooklyn. Quite kind of chilly actually, and came in like a bat out of hell from Boston, believe it or not, on Saturday in a thunderstorm. We just rode it in and we just slammed that Boeing maybe down. Actually, it was a small regional jet. Slammed the Boston shuttle down into LaGuardia in a full-scale thunderstorm, but I'm back. News of the week remains Exxon, Chevron, everything else. I was at Zero Week last week, as I told you I would be. And, you know, the week started with Darren Wood saying we don't want to buy all of Hess, which we thought was somewhat semantic because, you know, Hess is Guyana. And we're hopeful that someone will hire us to value Guyana, because in many of the scenarios here, which I've outlined in the research, the question of, you know, what is Guyana worth to Hess is absolutely key to the uncertainty around why Exxon is pursuing a legal case for arbitration. So obviously the value within Chevron buying Hess of Guyana is key. And, you know, the plot took a minor additional addendum, I think we would say, with, maybe that's understating it, with CNOOC also going to arbitration on Friday after the market. The prior week, Exxon had announced after the market on a Friday additional discovery in Guyana, which was their first update since April 22, which is interesting. Previously they'd had a regular tenor of updates, but it took them a while. But finally, before Darren Wood spoke this week at Zero Week, they put out another discovery. And in fact, CNOOC in its presentations, if you look, has very little, almost nothing on Guyana, which is interesting. But they do have Jackfish, is it? A major discovery listed at over 100 million tons. I worked at the IEA, 7.3 tons per barrel, 7.3 barrels per ton. I used to do that all the time. So that implies that that discovery alone is 730 million barrels or more. Significant being more than 500 million barrels, and Exxon's first discovery at Liza was significant. There's a lot of oil. And what we're saying essentially is the value of Hess to Chevron is more than just the present value of the future free cash flows, because it mitigates their risk in Russia. And Russia's oil infrastructure is being trashed at the moment, as far as I can tell, and it's difficult to tell, by the Ukrainians. And of course that raises, as we've said many times, by the way, the risk of, you know, Chevron being attacked, I guess is the right word, in Kazakhstan for its exports through Russia, which is an ongoing investment that they're making. It's already a major exporter, but, you know, I just worry that Putin is going to think hard about whether or not he wants Chevron to export through Russia in due course, because that will ramp up next year in theory. Speaking of ramp ups, everyone's being rude about EQT at the moment, because they bought Equitrans with a load of debt, which was like, why are you doing this? And the gas market remains a major concern. I'm not going to labor it. It is mildly chilly here, and you can see that the cherry tree got suckered. But it's not that demand's not great, because it is in the US, and it's going to get greater because, as we've highlighted, all these NVIDIA chips are going to need gas-fired power, and we've labored this point. But, you know, I'm also lapping myself, because the fact is that EVs are not going to need a whole lot of power, and a lot of these utilities have a load of EV demand in, which is never going to show up. And we're negative EVs, if you haven't noticed. Not that we don't think they're going to impact, but, you know, they're getting to the point where they're trying to give these things away while losing money. Anyway, that's all good for nat gas, but ultimately it's not the demand side that's the issue, it's the supply side. And supply remains absolutely abundant, especially with oil at 80. I had dinner with the CEO of a big liquidy gas play last week in Houston, and he was just saying you're going to be shocked when you see some of these dry gas names report. Having said that, the oil group is strong, and, you know, we've seen Matador hitting the market tonight, which we kind of like, actually, because the RSI on the group, the relative strength index, which is hot above 70, NVIDIA actually, I think, hit 100 recently for hotness, which is not surprising, but the oil group was at nearly 80, and we were going, I don't know if you want to just add some right here, son, just wait a little bit. And that actually over the last week, that RSI remains strong. So, you can, it's just a technical indicator, maybe that you need to buy more oil, especially as the Russian infrastructure is being attacked, as we noted. One other thing that's bearish that we highlighted in a note today is Alimentation Couche Tard, the Canadian retail gas station, mega gas station play. And they warned that the US lower end consumer is suffering now. And what we've seen has been interesting. It's a massive distortion in the way that the Fed has distorted so many things. They never needed to print so many dollars, dude. I mean, why don't you let the economy try and work it out for yourself? This thing is boiling as far as I can tell. Everything was good I was just in Mexico, everything, dude, these guys are all having a fantastic time. I mean, I know there's crime issues, but the economy is absolutely good down there. Anyway, the point is that the Fed printed too many dollars, and I lost my train of thought. Oh yeah, the lower-end consumer, Alimentation Couche Tard, is saying that they're now officially suffering, and we've highlighted that while wealth inequality leveled out with COVID payouts, you're now going to get to a point where the lower-end consumer is suffering, and so we're looking at weak gasoline demand into summer. Be aware of that. We're okay though, and we're actually long gasoline as a trade because we think there's a supply problem, and that pertains as much as anything to Russia, but also a lot of downtime at US refineries. So we're saying watch out for gas station companies, but we still like the refiners. And I was on CNBC on Thursday. I'm sure you watch CNBC constantly and saw it. I actually don't watch it, to be honest. So I can't really say that, can I? But I just did. But anyway, I was on there saying that they wanted to kind of victory lap MPC as a great stock, and MPC is a great stock, and it still has a ton more to buy back in terms of buyback. They've still got $10 billion of cash on the balance sheet, and for a $72 billion stock, even hitting record highs, we were like, okay, keep going. Now, if you're a trader, you might want to try and short refining here, but I don't know, we're heading into Memorial Day and everything's kind of booming globally, so I wouldn't be doing that with Russian refineries under attack. On that point, did I talk about the tree? Yeah, I did.